Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Tuesday, November 23rd. It is just a little bit after market close here in Jacksonville, Florida, 4:04 p.m. Eastern time to be exact. And today we're going to talk about the further weakness that took place in G5 stocks as the day progressed. We're going to look at some of those charts, and some of them are quite ugly. We'll do that towards the end of the show. But we're also going to look at continued strength in two key sectors, areas that we actually added to today. So we're going to get to that in just a moment. First, what just happened? Indices recover from the lows. G5 index weak again. As you can see there, the G5 down about 1.3%. The S&P actually recovered and went green at the end of the day, up about 1/5%, 0.17% to be exact. Q's down about 0.5%. The Dow up about 0.5% as the value and defensive stuff started to act a little better today. Mid caps roughly flat. Russell 2000 also pretty much flat, down about 0.1%. So really the strength was in the Dow today, as you can see, and in certain areas of the S&P as well, which we're going to get to. I mentioned some key sectors showing some continued strength today. But first, let's talk about the state. That is going to stay in an uptrend as of Don's video yesterday. That is still uptrend. However, we did shift leaders to neutral as of Don's video yesterday. We also, if we come over here to the trend gauge, have a little yellow arrow here on the short term. As Don mentioned, that is because the Dow and the small caps are below the 21, the Qs, the S&P, and mid caps all above the 21. So very, very close leash there on the short term. Could be going to neutral pretty soon. If we don't see some reversals or some positive action come into the indices. We've been pulling back the last 2 days, looking to see if we can get some bounces, and maybe we already saw some of that today, and we'll look at the charts here in just a moment. So medium term, the 50-day moving average, and long term, the 200-day moving average, nothing has changed there. We're still above those on all the major indices. So before we get into the charts, as I usually do, let me reference the team here at Revere. Please email me, hunter@revereasset.com, if you have any questions about any of the stocks I cover, sectors, whatever the case may be. Always happy to answer questions. Or if you're interested in what we do at Revere, you want to talk to someone, you can email Dan, Tim, Merrill, Alex, or Don@revereasset.com as well. So let's get right into the charts here, and we're going to start with the indices. So S&P really almost bounced off the 21 today, you could say. It got within about 1/10%, maybe 1/5% from it, and got back in the top of the range, as you can see by the end of the day, actually slightly above the 8-day exponential moving average here on SPY. Not crazy extended necessarily either. The 50-day is starting to catch up a little bit, around 4% from the 50, 1% from the 21 on SPY. QQQ down about 0.5% today, but off the lows, pretty much bounced off the 21. Kind of a similar action to what we saw there with the S&P. However, not back above the 8-day exponential moving average here on QQQ. So now we're about 1% from the 21, 5% from the 50 on the Qs, just to keep that extension reference. You always want to know how far are we beyond the moving averages, particularly on the Qs and the S&P, I would say. But a pretty rough sell-off here from 408 at the peak yesterday down to around 392, 393 today. So a pretty steep move for an index there. The Dow, we mentioned below the 21-day exponential, but really close. You can see it's still above the 50, trying its best to get back above the 21-day. What I am looking for, and what myself and Don are watching here, is that first close above the 21, first close above the 8 on DIA, as well as seeing if DIA can get through this level here, the highs from this day, 359.24. And what's really important to note, Don has mentioned this, look at the RS line here on DIA, moving up pretty sharply over the last 2 days. And conversely, look at what QQQ has done, moving down pretty sharply the last 2 days. So a pretty interesting divergence there. Looking like there's some rotation into the Dow type of names. IWM, small caps, basically bouncing off the 50 today, pulling all the way back here after an attempted breakout. We'll see if they can continue, or if small caps can continue any type of upward momentum or uptrend, and that would really start with getting back above the 21 and getting back above the 8. So the same thing, I would look for a break of yesterday's high, roughly above 235 is what would make me interested in small caps, above 235, 236 area. And then lastly, mid caps, they sit right on the 21 here. So mid caps above the 21, a slight undercut today, but staying above the 21, not incredibly extended either, just 0.5% above the 21 EMA and about 3% above the 50. And just for reference here, we are now only about 1.5% off the 50. At one point here, we were the most extended on the small caps. We were 7.5%, 8% from the 50. We've now come all the way back and bounced off of it since this peak here on around the 5th or 8th of November. So before we get to individual stocks and sectors and things of that nature, let's quickly touch on TLT, which has resumed its path to the downside. 2 sharp down days in a row for TLT, which has subsequently been good for financials. We're going to look at that in just 1 second here. But TLT going back to the downside, UUP pretty much hanging in there and moving to the upside, more or less doing nothing today, but this trend remains intact. It has not come back and even broken the 8-day exponential moving average. So now let's get into some of the stuff we did today and some of the stuff that was the strongest. So let's talk about those 2 strong sectors, right? We're going to talk about financials, banks, but particularly XLF. So today we added to FAS, which is just a leveraged ETF based on this ETF here, the Xlf Financial Sector Etf. So you can see we've had a strong bounce after undercutting the 50, gotten right back above the 21-day. I mentioned that the action in TLT has been down the last 2 days, meaning yields have come up. So XLF showing some signs of life. We actually added a small piece to this, to FAS, which, like I said, is the leveraged product for XLF. Added a small piece to that this morning. And additionally, the other really strong sector today was oil. We added or started a small position here in NRGU. This is a leveraged oil ETF. Some of the sectors in this or other sector ETFs, you can see XOP making a strong move up off that 100 level. XLE similarly reclaiming the 21. So some strong moves, in the oil sector today. And some of the best looking names in the oil sector, I'm going to highlight a few of these here. Matador, one I've talked about a good bit, getting back above the 21 after going down to test the 50 for the first time since a really strong move, right? Fang is going to be a very similar story. Looks pretty much identical to MTDR, tested the 50, back above the 21. We want to see that hold. And then a couple more here. SU, we do own this in Grotection. So we own SU. We also added NRGU, like I said. Let's see if we can get that to work one more time. There we go. Suncor Energies, similar story. Tested the 21 here on SU, back above the 8-day there on SU. And then last one here, I actually added this one in my tracking portfolio today to couple with Matador DVN. This one has been one of the strongest as well. So there's some really good looking names in the oil space that have come back the last couple of days. Same thing with the banks and financial space, right? We want to look at JPM. We can see that that's gotten back above its major moving averages, and Goldman Sachs. These are the type of companies that make up that XLF ETF, right? Bank of America, Goldman Sachs, JP Morgan, Morgan Stanley, etc. Those showing some nice bounces over the last few days, maybe perhaps got a little bit oversold there. So 2 of the strongest areas. One of the other strongest areas of the day, real estate, one of the strongest sectors, up about 1%, a little over 1%, but you can see some volume there. This ETF having some nice volume on the up days over the last week here, these 2 days there. But XLRE, one of the strongest sectors today. Also, Apple, although it was only up moderately, still holding up really well, especially compared to a lot of the carnage that's in the less liquid and smaller market cap growth names. Microsoft, the same story. Apple looks better, but Microsoft is still above the 21. So some of these bigger tech names holding up better. Apple actually green today. Cryptocurrency actually had a pretty good day today as well. GBTC, was actually green. Now, granted, these aren't the best charts, but we are seeing, we saw these names look a little bit better today. So Ethereum up 7%, Bitcoin up about 3%. So cryptocurrency making a little bit of a comeback. It's kind of been dwelling under the 21-day exponential, at least Bitcoin has. Interesting to see if we can get Bitcoin back above 60K. So I covered the 2 ads for the day. I'm going to go over some of the sells for the day. We got stopped out here on Dexcom. We sold this position, harsh break of the 21 and the 600 level. It's, these 2 candles you see for yesterday and today as we go through some of these stocks, you're going to see a lot that look like that. There's been some really sharp and brutal sell-offs in a number of growth stocks ranging across really all sectors. There's nowhere really that's been that safe. I know I covered financials and gas, or oil and gas, as being a strong area, and that's true. But I mean, this Dexcom is a medical company. Like I said, we were stopped out of this today. TAN, this is solar, just breaking below the 21. You can see the harsh reversal from 101 roughly yesterday at the peak down to 92 or so today, 91. So like I said, a pretty sharp move, a 10% move down from the peak yesterday to the low today. So some sharp moves down. This is an ETF as well. So solar stopped out there. We trimmed a few names to very small positions. Roblox, it is still above the 21, but a pretty nasty reversal from 140 to 115 over the last 2 days. We trimmed AMBA to a small position as well. This one, our cost basis is good. It is below this 50-day moving average, but similar story. You don't like to see this action. These are some ugly candles, although it hung in there today. Some nasty action here across the board, and the net one that looks pretty nasty as well. We trimmed this to a very small position. Additionally, we did take off the remainder of our hedge. This is, now that's not the chart you want to see. I'm sorry, let me pull this up. QQQ. We took off the remainder of the hedge as the Qs bounced. So we were selling into strength and then selling as we saw the strength persist, and we saw the bounce into the end of the day. So we took the rest of the hedge off. And part of that is because we continued to sell and get stopped out on some of these names. So we were reducing our beta, which allowed us to feel a little bit more comfortable taking the hedge off. And I just want to show a few more here that highlight some of the carnage in this illiquid stocks or smaller growth stocks that have really been crushed. I mean, we all know Upstart basically cut in half over the last month and a half here, from 400 to 200. Team, this was one of the leading stocks. This one has had a rough 2 days, kind of like what we saw with Net or with Dexcom, down 7% yesterday, down 4% today. DOCN, this one was down 20% yesterday, down another 3% today. ASAN, down 20% yesterday, 23%, down another 5% today. Just showing you some of these growth stocks that have absolutely been hammered recently. Celsius down 30-40% from its highs. So I mean, even CrowdStrike, which is a pretty institutionally supported big name, growth name, below the 200-day, down, I mean, roughly 20% from its highs in a matter of about 2 weeks. So there has certainly been some brutal action out there, but there is strength in certain areas. Real estate starting to come back. Home builders have acted well. Financials, oil and gas showing some strength. So maybe focus in those areas, look at those areas. But that is going to wrap up today's video, everybody. Thank you for listening. I hope you enjoyed it, and I will see you on Thursday's video as well as the podcast. So have a great week, everybody. I hope you enjoy the holidays and have a great Thanksgiving.